consecutive days
Morning,
of losses, sitting at around 4-month lows. If I remember correctly, you were relatively bullish about how much further the NSE could have rallied by the end of the year. So I'm sure you're slightly disappointed.
I am. I think we've had an upgrade on economic growth. The IMF recently said they expect 4.9%. We had the referendum, which I thought reduced the political risk a great deal. And I expected a rally of about 10 to 15% into year end. We didn't get it. We're down 9% from the 2010 highs. We've had a sequence, as you said, of 10-day losses. And really, it's a quick time to sort of take a quick review of what's going on. And I think we've hit a sort of illiquid period. We've had this big rights issue come out of Kenya Power. And really, people have been looking for liquidity in order to go for their rights and shutting up shop. And I think that's sort of spiraled on itself. And that's why we've come down here. I expect a bounce this week. It's very oversold.
Well, where are you seeing opportunities at this point in time? Clearly, with down 9% from the 2010 highs and the fact that you're expecting a 10% rally, I'm sure this must be a buying opportunity for you.
Absolutely, and what I'm looking at is are those stocks which are trading on a very cheap forward price earnings multiple. Our market tends to be relatively unsophisticated. Rallies happen when the P's change and are published in the newspaper. But if you look at what's going on, something like Kenya Airways is on a forward P of 7.5, KCB is on a forward of 6.8. The tea and agricultural stocks, let's take George Williamson, which rallied sharply on Friday, is trading on a trailing and a forward PE of 2. And I think those are the stocks where really it's pretty much a no-brainer. And I think you'll have a very sharp rally early in the new year, probably coincident with the full year results. But that's where I'm looking around at the moment.
Aly Khan, I mean, you mentioned the World Bank, of course, they have a very positive outlook for Kenya, and they are talking about the telecom sector being one of those key focus areas. But interesting to note, when you look at Safaricom, it's pretty much done nothing over the last couple of months, despite the fact that we saw a good strategy into the data space and good results.
Yes, absolutely. It's been a bit of a disappointment. I can't see it going any lower than here. It's pretty much underwritten at the price. The very, very big bids sitting at 450 and 455. But the buyers feel under no urgency to push those prices higher for now. I completely agree with you. I think everything, the bathwater's in the price of Safaricom. I think a lot of people got absolutely, lost a lot of confidence when Airtel came with their price splits. But I think you've got a bottoming out in the voice war now. We know where the prices have settled down. And I think over time, we're going to see a recovery in the price. The biggest drag for something like Safaricom is there's 753,000 individual shareholders who tend to sort of hold down the price in circumstances like this. Until they're cleared, or a substantial proportion, that's when we'll see a big rally happen.
CMC, one of those stocks that came under significant pressure last week, and that stock down 7.3%. We know that this is a relatively volatile stock. What is going to be the driving force behind this share going forward?
Well, the driving force is it's in the motor sector. They are a big motor dealer. The share price tends to trade very high beta as a lot of, it's a price pattern I'm seeing in the last 10 days across the Nairobi Stock Exchange, where shares are being low ticked on volumes of like 1% of what their normal moving average is. And this is what happened to CMC last week. And that's why I think we're oversold at this point in time in the broader index. But something like CMC has had a tough year and a half. I think investors are looking for a turnaround, but the big volume trades have been about a shilling higher than here. If you want size, you're going to have to pay up more than the current price. That's a fact.
Aly Khan, you mentioned Kenya Power, of course, launching its rights issue on Wednesday last week, an average price of 210 shillings and, of course, 450. Were you involved in the rights issue? You were talking about many trying to find liquidity to get involved. Were you one of those investors?
Well, no, I wasn't personally. I think it's an interesting value proposition, Kenya Power. These rights are not being sold at a steep discount. The raison d'etre that was made by the issuer was that, you've got to keep up, you don't get diluted. It's not, these are cheap shares. It's a utility, it's on a price earnings of 10 once you come through this rights issue. I think there's a little bit more of a journey. And at this sort of price, I don't think, I prefer to be looking at something like Kenya Airways and KCB, which are at a much steeper discount. So I think what you're seeing is a little bit of uncertainty coming into the market. That's these 10 days of losses about the pricing around the Kenya Power issue. And I think, the market's a little bit nervous and really needs to see a full take-up. I know the rights issue has been underwritten by Equity Bank in Centum to the tune of 50%. I think that's brought price weakness into Centum in the last few sessions as market operators look at it and say that's a big risk to be writing, and is it going to be pulled off? So I'm a little bit unsure, and I'm on the sidelines on this one.
Yeah. Aly Khan, Fed Chairman Ben Bernanke under the spotlight again, talking about QE3 after an unemployment rate of 9.8%. We've got the Eurozone still under the spotlight with bond purchases. We also had a blast in Nairobi, and it seems that most investors didn't really respond to this. The market's not responding aggressively. What is going to be the driving force for the Nairobi Stock Exchange as we head towards the end of the year? We also know that it is very vastly different to the likes of the South African market. We're very much linked to what happens on the global level.
Yes, we're somewhat disconnected. We tend to go on our own trail for quite some time. I think, we got domestic situations around our rights issue, which are going to be pretty much preeminent in driving the market forward. And it depends on the take-up of that rights issue and the sense of confidence that will come out of that. But the economy is growing at 4.9%. I think it's going to accelerate to 6% next year, all things being equal. And I think, at these sort of levels, it's oversold. This is the time to be stock picking. And I think you'll find support coming back into the market. The Nairobi Stock Exchange, I think, it has been on a bullish trade all year. We've retraced 9% from the peak. I expect us to bounce before 10%. And I think we'll have a nice rally in the first quarter as the full year results start to filter in. And there'll be some pretty muscular ones coming out of lots of different corners.